Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared disclaimer. Be aware that neither Dimitri, Market Chameleon, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. Be aware this show is for informational purposes only concerning Market Chameleon tools and products. One last look at the disclaimer, and good morning, Dee.
Good morning, Will. How are you?
Good.
Good morning, everyone. Let me share my screen here. And while I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. Will's keeping an eye on it. He'll let me know and read it back to me. And to give you a couple minutes to put those questions in, we're going to take a look at our pre-market report, review what's going on in the pre-market hours to see what type of insights we could get, and then we'll move on to our questions. So up here, pre-market report, what you'll notice is this calendar view up top with summary statistics, what happened in the pre-market hours during these particular dates. And one sec, I think there's background noise. I'm gonna close my, hopefully that's better. So getting back to this page, you'll notice that there are summary statistics for what happened in the pre-market trading for those particular dates. And the idea there is to be able to quickly eyeball and compare today's activity to the most recent history and see if you could spot something unusual or a trend. Let's review today's activity, August 28th. Here you'll notice 286 stocks are trading higher in the pre-market, 412 stocks trading lower. There are 139 million shares trading on up volume, 52 million shares trading on down volume. We have $1.1 billion worth of stock trading higher, $1.4 billion worth of stock trading lower. And from that perspective, it looks like a little bit of a mixed bag. Probably, I would say a little more, a lean more towards the bearish side, just eyeballing it in the pre-market trading. Let's look at it from a couple more perspectives, then we'll move on to our questions. So I'm going to slide down this page. And what you'll notice now is a more granular view of what is going on in the pre-market trading. You'll see stock symbols with price and price changes and volume. We also have our most active stocks, our biggest percentage gainers, biggest percentage decliners list. And down here, we see 27 stocks made it onto our biggest percentage gainers, 88 on our largest decliners. So from that perspective, it looks like the trading in the pre-market hours has a more bearish lean. Now, to make it onto this list, we set thresholds because stocks in the pre-market could have low volume, low liquidity, and if it meets our thresholds, it could make it onto this list, and that will include small cap stocks. It'll include ETFs. It could be a closed-end fund. It could be a leveraged ETF or an inverse ETF. And to narrow down this group further, we could use our filters above. Now, you could see here that there's a filter here in my watch list, and you'll notice that filter on other screeners we have or reports. And this allows you to screen out or filter the report you're on by the stocks that you saved in your own unique watch list that you want to track. Okay. We're going to use this filter in ETF in our example, but it will give you an idea. It's a similar concept. When you click on that filter, you get this drop-down menu to select from. These are different ETFs. We're going to go ahead and choose SPY, the first one. And when we do that, what will happen is that the report will get filtered by, you know what? Well, let me refresh my screen here. I think I had it open too long.
That's fine. D.
Yep, let me just refresh my screen here. And so let's go ahead and do that again. ETF, we're gonna select SPY. And when we do that, what you'll notice is now that that report got filtered by stocks that are holdings in the SPY ETF, which is the S&P 500 constituents. And that concept is similar to if you save the watch list with just S&P 500 companies, and that's what you wanted to analyze. Now we are analyzing that group of stocks based on this report. And as you can see here, there are 0 stocks that made it onto our biggest percentage gainers list, didn't meet those thresholds that we set, and 6 made it on to our biggest decliners list. So from that perspective, it also looks like trading in a pre-market hours has a slight bearish, lean bearish bias. We gave it a couple minutes, Will, so if you have a question, I'll take it down.
Nothing's popped up yet, D.
Okay, so let's continue on our discussion on Nvidia.
Before we get on to that, D, can I share my screen real quick?
Yeah, and I think we were talking about. Yeah, let me.
All right. I'm stopping my share, and we're going to discuss Nvidia this morning, correct?
Yeah, so let me share my screen again. Okay, we're discussing Nvidia and analytics around Nvidia earnings, historical earnings. So I'm going to go back under earnings into this interactive chart, and I'm going to close this menu to expand the screen. So in the previous discussions, we talked about the implied moves based on options prices. We talked about earnings moves, talked about opening gaps. We also talked about intraday drifts when we analyzed how the options and the stock tended to behave historically when Nvidia reports earnings. Okay. So we could, when we look at the stock behavior of Nvidia after reporting earnings, there are different ways we could analyze it, using different reference points. And we discussed three of them as far as stock behavior, where we looked at the stock, how it closed the previous day before it reported earnings, and then where did it close the day after reporting earnings, and that's over here, earnings moves, which measures how much the stock moved, right, from one reference point to another. So that's an entire days of trading from the previous day's close to the end of the next day's close price. We also talked about a different way of measuring the stock's behavior, where we could reference the previous day's close to the opening of the next day. So that initial gap, because when we talk about the close to the open, right, that's kind of a gap because there's no regular trading hours in between the close and open. You have after hours and pre-market, but the opening price is kind of that start of the official trading hours, which was also important because that's where, once the stock opens, the options will open, and then you have an opportunity to start to rebalance your positions, trade options and so on. We also talked about the intraday drift, and this was looking at it from a different perspective. Well, now you got the opening price. Well, the opening price should already start reflecting that news that came out, right? So now you had an earnings release. You 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 have these uh, either press release or numbers come out, and the trading community, the investing community has a chance now to take a look at it, enter it into their models, get new fair values, and then they they start trading. So now you have this opening price that kind of is the first indication of where the market repriced the stock after reporting earnings. And then, well, how well did that do to the closing price? Was the closing price very close to that? If not, then there's a big discrepancy, deviation between where the market initially priced the stock to where the stock closed, right? So that's the intraday drift. How much more volatility and movement was there? That's what so far we discussed those three aspects. So a couple more we could look at. There's many different angles to look at it from. And another way to look at it is the extreme. How much did the stock move to the extreme levels, right? Where you have this trading going on intraday, right? So now you have the previous day's close, the stock opens, but there's continuous trading throughout the day. From the open to the close, you have continuous trading, and the stock could move around. Where from the place it opens to the place it closes, you could have a lot of volatility in between, right? Like even this drift 2.8% doesn't tell you the full story, because the stock could be fluctuating, a lot in between. So what about those extreme levels? How can we measure those, where we take it from the previous day's close, let's say, and then what's the highest it went from the previous day's close, or what is the lowest it went to the previous day's close, right? So that's what these simple returns are looking at. One is the maximum to the high, the max to the low, right? So the max to the high, what we've seen from the previous day's close, was up 31%. The max move from the previous day's close to the low price the next day was down 20%. That's a really wide range, right? That's a lot of risk, where you're looking at this stuff, just looking at those two numbers, you're like, oh wow, it was up as much as 31% one time at least, right? It was down as much as 20% the next day. That gives you an idea of the historical range, when you're looking at potential risks here, potential rewards. So let's click on this max high. If you click on it, now we get this data. So I clicked on it, or you could move it here, earnings move to high, right? To high and low. So here it shows us the max move that the stock experienced on those particular dates, so the historical earnings dates. So if the maximum move was to the upside, it'll show the bar in green. If the maximum move was to the downside, it will show in red. Okay, so here what we could see is that the magnitude of the moves, right? The magnitude of the moves is displayed by these bars pointing up. So all the bars are pointing up, which gives us a sense of the magnitude of the move. So we could see here, like, a lot of them actually just eyeballing it, a lot of them look to me like they were kind of to the upside, the very big moves. Maybe here, you got like maybe one here to the downside, down 20%. Here, down 8.8%. But this shows that the volatility, right? Just the the magnitude of the moves could be violent to the upside as much as to the downside, right? That's what when we're looking at it, we're like, well, wow, there's a lot of very large moves to the upside, not just to the downside, which usually you think like, there's more volatility to the downside, but not when we're looking at this data. And what about, if we took the average, so if we separated them out, one to the high, one to the low, okay? And if we said, okay, what were if we took the moves that were to the upside, right? The extreme moves to the high of the day. Keep in mind, this is only looking at the previous day's close to the high of the day, or the previous day's close to the low of the day. If we took just to the high of the day and averaged them out, right, it looks like on average to the high of the day was 8.7%. However, if that's the average. If we took the range, right, the range is very wide. It was as high as 31%, as low as 0.3%. So that's something to keep in mind when you're looking at the average. But if we look at the dispersion or the distribution of that data around the average, it could be very, very wide. A lot of variability around it. The median move was 6.7%. So now let's look at the average move to the low of the day. That was down 4.6%. With a range between 0 and negative 20%, with the median move down 3.3%. So just looking at, oops, how do I must have clicked on something. Okay. So just comparing the two, right? Just looking at it visually and comparing those statistics alone, and looking at it only from a historical perspective. We don't know what will happen. I think actually today, Nvda is supposed to report earnings after the market close. Well, we don't know what's going to happen because it didn't happen yet. Right? We no idea. Until it happens, until they report earnings, until we see the next day, we don't know. Nobody does. But we could look from a historical perspective how it tended to behave to get a sense of maybe potentials here. How it moved before. And looking at this data, a couple things kind of stick out is that the moves to the upside, right, to the upside, seem to be much greater. That the upside surprises so far doesn't mean it doesn't have to happen next time, but the upside surprise moves, the magnitude seemed much greater. Right, you got on average 8.7% to the high versus the downside 4.6%. Right, and we could also just compare the median move. Right, the median move to the upside 6.7%. The median move to the downside is 3.3%. So if we were looking at it from a perspective of a skew, right, which was, if I was looking at it and thinking like, how would the skew look like, from this part, you would think that, well, the upside should be skewed as higher, if not at least as much as to the downside, just from this perspective, because looking at this, without looking at the markets or taking any other data or information, in, I wouldn't expect that the downside or the upside options should be skewed lower than the downside, because you could see here that the upside, at least from a historical perspective, has shown that it could be the moves could be even more violent. So that's kind of one observation. Maybe there's an opportunity there. I don't know. And even to the extreme, let's just take the very extreme levels. And this could be seen from the averages and from the median, right? Another, observation is just to the very extreme, right? To the highest, to the highest, to the low, you could see up to 31%, down 20%. Now, those are both significant. I'm not saying that those are both very significant moves. You can see that even to the upside, it was much greater, 31% versus 20%. And that would be reflected in the averages, of course, but we could see that even the median prices confirmed that those moves to the upside were much greater. Now, what if we wanted to say, okay, if we're looking at a straddle, or we're looking at like the probability from a historical perspective, right? If we took the historical data and said, well, let's calculate the frequencies of stuff happening. And let's say we wanted to see what is in our data, the probability, the frequency of the stock moving from the previous day by a certain percentage, more than a certain percentage, right? Let's say, because we can't looking at this data, it's hard to say it's all over we have some as high as 31%, some as low as almost unchanged, or 0.3%. So what if we wanted to say what is, from a historical perspective, the frequency that the stock moved at least 5% in either direction? Okay, at least 5% at any given moment, from the higher to the low, right? If we wanted to know that, well, that's what we could try to look at it and add it up eyeballing, or we could use this calculator. So let's say I put 5%, a 5% move at any moment that would it reach it, right? At least hit that or higher, right? Let's calculate that. So 67% of the observations that would have at least hit 65%. Okay, let's do 1%. So at least 98% of the historical observations of the stock would have moved at least 1% or more at any given point, right, throughout the day. What about like something maybe more extreme? Let's say 10%. How often would it hit 10%? Which is a pretty sizable move. Nvidia is not, it's a very big market, it's a large market cap stock. I don't even know, is it like one of the biggest now, Will?
I think it is one of the biggest, D.
Yeah. All right, so let's say a 10% move, at any given point, the historical frequency that it touched at least a 10% move in either direction from the previous day. So let's calculate that. That's a 29%, right? So 29% chance historically from, that it moved at least 10% at some point of the day. Could be, anywhere. It could be the opening, it could be the closing, it could be anything in between. That. So that gives you a sense of, how volatile it is. That even if you're looking at a 10% move at any given point, there historically did it the historical observations, 29% of them say that it's happened, at least. We could do 15%. Let's say 15% move. How infrequent is that? Let's try that. Well, now you got it 19%. That's still a significant amount. That's 19% of in the last whatever 10 years, it's moved more, at least 15% or more. All right, so that's still a pretty significant amount. Just letting you know from a historical perspective that the potential risks here of large moves. We could also narrow down this data by quarter. So Nvidia is going to report second quarter. We could see if we narrowed it down by second quarter, if it looks different. So let's do that. Now I filtered the whole thing by second quarter. And you could see here that the numbers are a little bit similar from the point of view of the skew. You could see that the average move to the upside exceeded the average move to the downside by a decent amount. And the median move confirms that too. The high move was 14.3%, to the high, down 7.2% to the low. So obviously, if we put in 15%, if the high move was 14.3, then there's 0 observations that went above 15%. All right, so that makes sense too, because that's the biggest move. The biggest move was 14.3. But what about a 10% move in either direction? So we can put a 10% move because that will fall in with between our ranges. So let's do 10%. That happened 10% of the observations right here. Keep in mind that when we're looking at just the second quarter, that only happens once a year, right? So that's why the number of observations has decreased significantly. We don't have tons of observations here. It happens once a year. So we're right up at 9:30. I think I'm going to stop it there.
Yeah, that was great. That was great stuff. The Chameleon community is very happy with this look at the video over the past couple of days. We'll see what happens. I think it's after the close today, right?
Yep.
Everyone's talking about it in the news, so it should be interesting. Great job, D, as always. Thank you.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and hope to